Today's market call is presented by FactSet, financial data and analytics powered by tomorrow. People, 1 o'clock on the East Coast. Swizzle here, Dan there, coming to you live from 40
reversals
headquarters, 45 West. If I do,
no, don't dox us.
Why is that?
I don't know.
Because you think people wait.
Risk Reversal Media's global headquarters.
Yeah. Here we are on this 1 o'clock on the East Coast. This is Thursday, the 5th of September.
Yeah, it is.
In a few minutes, Carter Worth. We did butters yesterday, so we had our butters fill for the week. We don't want to have a cholesterol problem. But there's a lot going on here. There really is.
We quote FactSet stuff all the time.
Yeah, no.
So we might have a cholesterol problem.
He's the man. Butters he's back from Wisconsin.
Yes, or wherever he hails.
He does. He goes wherever he wants.
So you know what? Thursdays are exciting days for me, guy. I'm going to tell you why. We get to do this in person together.
We get to drink my spin.
We get to then sit down in a totally different podcast with Danny Moses. Okay, and we get to do on the
who's
tape.
In a few rooms over.
Yes, he is. And then we go do Fast Money.
CNBC's Fast Money.
A lot of fun.
Melissa Lee's
I love
back.
Thursdays.
And Thursday is Thursday. Let's put the rundown up because Amanda Diaz has done a crack job.
Sure, she has.
So good. Inside jobs report.
Yeah.
I like that.
Yeah.
Equity indices, nothing as it seems.
Yeah.
By the way, I see the theme here. How does the market rally stay alive? And SPY protection trade.
Yeah, we're going to do that.
And I threw out, but apparently nobody liked it.
Yeah.
I wanted to do Jeremy Grantham's calling.
She did mention that, but did he have a call out, Jeremy Grantham, or no?
He's been pretty vocal recently, and now for you folks out there, you can look on the internet to see who Jeremy Grantham is,
or you can see what the theme is with our topics of the rundown.
Okay, but yes, there is a theme.
Yeah.
So we're going to get into market stuff. We're going to bring in Carter, but last night you were at the Madison Square, long hair at the Madison Square, most famous arena.
Yeah.
And you saw Pearl Jam for the 4th time in 7 days, 6 days.
Yeah, how about that?
In 2 different cities.
Yeah.
And probably maybe the 50th time you've seen them.
Yeah. No, not the 50th, 25th. But you know what's interesting? So I was at Wrigley Field, over the weekend.
Sure.
You know who's going into Wrigley Field?
Yankees.
Yeah, that's a weird thing. How many times in the history of Major League Baseball do you think the Yankees have played in
probably not all. I mean, they played in the World Series. I could probably go back and look.
What year was that in the World Series?
38.
Wow.
You'd have to don't dox me if I'm wrong.
No.
But obviously the Cubs have not been
wrong.
No, huh?
I think
the Cubs have not been in the World Series all that often.
Yeah.
But the Yankees have played there. But what's great about this is for you baseball purists, of which I'm one, tomorrow, Friday, it's an afternoon game.
Yeah.
So if you're looking if you get
That's
home
what they
and
do in Wrigley.
If you get home and put on WPIX at 7:30, you ain't getting the Yankees. That's old school shit. All right. So let's take a look at what's going on here, Dan. Let's look at our first chart. Because believe it or not, it actually is a sort of an interesting day here. So throw it up there, Amanda, and let's get going.
Well, so it's interesting. I was talking to Danny earlier today, and it's for like months and months and months. It feels like a year and a half. It's like every time the market would like open down for whatever reason, 50 basis points or something like that, by midday they're like up. You know what I mean? And what happened over the last week or two is like the opposite of that, right? So if we're kind of opening up, it feels like it's in very weak hands. It feels like it wants to sell off, and that's what we're doing. And this morning, I'll just say that I was looking at some of the hardest hit stuff over the last week or so. The rallies were anemic kind of guy. You know what I mean? Like when you see an NVIDIA sell off over 2-3 days the way it has, you would expect for a bounce, something that's somewhat sustainable, not sustainable.
I don't think it is. And the point that I've been trying to make is the way the market bounced off those August 5th lows, as great as it was, if you weathered that storm and stayed long, because we basically made it back over the course of 8 or 9 10 trading days. The speed with which it happened should be concerning. It sort of flew in the face of what we saw in April, where that was sort of slow and steady. That sort of was a grind, and the market was doing its thing. This speed of this one should be concerning, especially if we're starting to see this rollover. And that's something I thought. And by the way, to a certain extent, we'll talk about this, the volatility index is sort of backing up that thesis.
Yeah, no doubt. So, we have the VIX at about 20-ish or something, 21 almost. And so that's implying, at least 2% moves in either direction. So at least the way market participants are thinking about this, maybe you're not seeing a ton of volatility in your individual names. At least the positioning is playing for further volatility, which again, let's just talk about tomorrow morning. We have the all important jobs report. We had some data today.
Well, throw that slide up because
yeah.
I love this. Is a fun one. I don't know what that arrow is in the middle. It must be part of a video or something.
You
would
hit
you hit
that and
the
it'll
arrow
play.
and it plays.
Correct.
Well, you can't do it now.
Nope.
Like I can walk over to the screen and try to hit the arrow. It's not going to work.
They might be able to do that in a different iteration of this.
Yeah,
I mean,
nobody
that would be
wants
kind
to.
of cool.
But once again, this is sort of backing up some of the points we've been making with EYT and others that the job market is probably not nearly as robust as it seems. And one thing that I've said, and I'll say tonight on Fast Money, and I'll say here, is that we're at a point now when all these rate cuts are definitely baked in, where bad news is going to be bad news. The last, maybe 6 or 7 months ago, bad news might have been good news because it reinforced this misguided belief that, the Fed was going to come to the rescue. Now I think they've made it clear that's what they're going to attempt to do in the form of rate cuts. The problem, of course, is now if bad news comes out, it is, in fact, going to be, I believe, bad news for the market.
Well, if you just look at what's going on, let's pull up the CME FedWatch tool here. I mean, it seems like lots of folks are positioning for possibly bad data tomorrow morning and 40% probability of a 50 basis point cut right now. I mean, we're not far away from a toss up here, when you think about that.
Amazing.
So it'll be interesting to see if the data comes in line. Okay. And I wonder if yields have moved ahead of this. We saw the 210 spread kind of go flat, right? So, it'll be really interesting to see. And Amanda also has a chart. I think it's from Baycrest, showing the market's reaction post the jobs number each month over the last year. Those moves have definitely, they've been all over the place, put it that way. But the percentage change, in the SPY, if you look at the last couple months, last month was the thing that got things going a little bit. So talk to me about what you're thinking about the potential volatility, guy, around different scenarios as it relates to.
I think a bad jobs, again, I don't know what a bad is, but I think what I've read is there's I don't know if it's consensus, but there's a school of thought that the 4.3 might tick down to 4.2 in terms of the rate. I am not of that belief. We'll see. But if we continue to see this stair-step function higher, which I do believe is, market's not going to like that. And this is fascinating to me, the fact that it's almost 50-50 in terms of potential 50-point cut. Maybe the knee-jerk reaction to that surprise would be the market goes higher until people say, well, wait a second. What are they seeing here? Like, what are they concerned about where the first move is going to be 50? Now, the pushback to that will be, well, wait a second. When they started raising rates, they did it in a pretty precipitous fashion. So it stands to reason when they start cutting them, they could do the same thing. I get it. The problem is I don't think those rate hikes were warranted vis-a-vis what we're seeing in inflation. I don't think a 50-point basis cut is warranted given the backdrop of, although things are slowing, nothing's broken yet.
Yeah. Let's pull up that the SPX chart for a second here, and we want to go through a couple things. So again, you can look at that uptrend for what it is. We obviously broke it pretty hard. We stopped in and around that 150-day moving average, and that's really where the close was. So yeah, it sliced through there intraday, but we know what happened on that reversal. We get up back towards those prior highs, we consolidate there, and clearly we broke a little bit here. So the question is, if you're looking at, I don't know, what is it, 5270 or something like that in the cash guy, that's that 150-day. In the SPY, it's like 527.5 or so. So we're thinking about this as far as like what's implied into tomorrow. It's about a 1%, 1.25% move. And then by the end of next week, we have some inflation data. And then the end of the following week, we have this Fed meeting. So I was looking out to September expiration. This could be an outright bearish trade, or it could be the sort of thing that gives you some downside protection over the next few weeks. So I was looking at the SPY today when it's trading about 548.5. You could buy the September 20th expiration, 545, 520 put spread, costs you about $4.50. Your break even is down at 540.50. You have gains of up to 20.50 between 540.50 and 520. Max gain below that on the low end, and then loss of up to 450 between 540.50 and 545. So what I like about this trade, whether you're using it as protection or just a near-term bearish bet into plenty of catalysts between now and September 20th, it risks less than 1% of the ETF price. Now, granted, it caps your gains down there at 520, but that would be a very reasonable target, I think, over the next 2 weeks or so. And I want to use a 50% premium stop when I think about this. So if I paid, 450 or something for this, if the thing got to about 2.25 because the SPY is going up or going sideways and it's decaying, I want to cut that and move on. So I like the setup of this. I like the technical setup. I like the catalyst setup, and I like the vol setup in this trade.
The vol setup is the key to this. I think, look, it would have been great to be able to capture this 4 or 5 trading days ago when the VIX was 16. But you can't listen. There is no perfect timing. With that said, if you are of the belief, which I am, and clearly you are, that there's another vol spike coming, you're getting the vol portion of this. You're getting enough time, I think, where you capture a lot of the things that you mentioned, and you're probably looking at close of a 3.5 to 1 in terms of risk reward. So this is obviously a directional bet, or to your point, it could be a bet to protect an underlying portfolio, those types of things. I like this more as a directional bet, though.
Yeah, I do too. And I'll just say this. I'm not looking for things to absolutely fall apart. I'm looking for things to kind of, get back towards.
Cascade.
Yeah, no, well, I'm looking for things to maybe get back to a support level. We know that rising 150, Carter's 150 is a reasonable near-term
so happy
target.
we did that, by the way.
Yeah.
It took us too long.
Let's do this thing.
Yeah,
Carter Braxton Worth.
As they say, bring them in. As they say, though, the best time to plant a tree, Carter, was 20 years ago, given how trees grow. The next best time is today. So what it basically means is this: listen, we were late to that dance.
Yeah.
But at least we got to the effing dance.
Yeah, finally.
Anyway.
Hey, Carter, welcome.
What's up, fellas? Yeah. Hi.
Really quickly, we're going to pull up my S&P chart for a second here. Is that uptrend okay? I know we sliced through it and it bounced at your 150 day. And, is there any authority now that we just broke in below the line that I drew?
Well, I mean, the question is, we know it's an uptrend, right? The question is the uptrend under pressure? And that's, of course, the case, right? A fairly substantial drop, 9.7%. But remember, that's the S&P. Just to put it in context, the S&P is the whole. The most important part of the whole, the tech sector, dropped 20%. The most important area within tech, semiconductors, dropped 27%. And the most important stock within the most important area, semis, within the most important sector, NVIDIA dropped 35. So it's an important re-rating for the market. And then the inability to make the new high is the issue, right? We know the equal weight did, RSP, if you want to use that, but SPY did not. We're looking at the SPY here in the form of the SPX, and it has all the risk of something that continues to roll over.
There's certain words that are great to use that are not used often enough. When inflation started becoming a problem, I used the words persistent and
pesky.
Yes, I did. And there was a great show on CNBC for a period of time. Maybe it wasn't so great, but it was called Money in Motion.
Oh, yeah.
You may recall that show.
It came right on after
Sure
Options Action, a show that Carter and I did for years.
Short-lived, but a show nonetheless. I mentioned that because Carter's first slide speaks to both those things. So, Carter, walk us through the whole Money in Motion, those pesky internal trend lines.
Yeah, there it is. Just for what it's worth, that was borrowed from this. Of course, this written work, Money in Motion, predates the show. Happily, the show was short-lived, at least from my perspective, having borrowed that title. In any event, let's look at the internal trend lines for the major averages, indices here. I've done this in descending order by market cap, by total value. Of course, the big kahuna is the MSCI All Country World Index at 75 trillion, Russell 3000. That represents 98% of the investable capital of the United States at 60. Right there, just below it is 51 is the S&P, and so forth and so on. But let's look at each in turn. And so these are important levels in the sense that what? Well, the first, or share, we know what that was. That was a valuation peak. That was the .com. The second, late 2022, was also a level of valuation not seen since the .com era. and it's from which the 2022 bear market ensued. S&P dropping 27%, NASDAQ 100 37, and we're back there again. Obviously, valuation a bit less extreme than it was in 2021, early 22, but it's an inherently difficult level, and the market is indeed finding difficulty. We can look at any number of these indices, and they're all going to show the same thing. There's the S&P. We can keep going. There's the NASDAQ composite here, and then the NASDAQ 100. And so while the NASDAQ 100 eked out a slight move above, it's faltering at that level. It's just an important reference point. All time frames matter. These are very long-term time frames, just as a short-term level or a gap can matter a lot. But it's just something that needs to be in the back of one's mind, where generally the equity complex is in relation to its 30-year trend line, both in the US and globally.
Well, this goes back, obviously, I think the 95. Let's go back to the first one, the All Country World Index, $75.37 trillion. So the size of this makes it important, and the duration makes it equally important. And although there are only 3 points there, one could very easily fudge and say, you know what, they're actually 4 points. I bring that up because the subsequent move after touching this trend line was pretty significant to the downside. And we are, again, right up against it as well. So if you're playing, there's so many things, Dan, that have to go right, in my opinion, for this to continue through that trend line, that it's almost, when you look at it through this lens, it's almost far-fetched to think that could happen.
Yeah, let's go to the S&P one here for a second. And just the fact that, Carter, I saw this note that you put out to your clients, I think it was last night. And I, when you see these pictures, it's just absolutely amazing, right? Excuse me. So when you got rejected, that arrow right there, okay, and we had that nearly 10% sell-off, how important is it that we came back very quickly and now it's right back up against it? You know what I'm saying? Like, some folks will have a fundamental bullish view on S&P earnings and yada, yada, whatever. And they're going to say, we're going to finally break out or something like that. Like, because it's happened so quickly, within a month and a half or so of that failure, like, just give me a sense of like how you're thinking about it. Like, do you have a high conviction that it gets rejected here? Just thoughts.
Yeah, well, if one were, remember, these are monthly bars. So if you looked at it daily, it sort of contended in 2021, December, January, for several weeks before ultimately. And so that's kind of happening now. And one could say, no, it went above. It's not about whether it's to the penny or not. It's the principle, it's the concept. And this kind of chart reflects whether one likes the Warren Buffett, stock market value to GDP, or the Shiller, the 20-year CAPE, whatever. They all line up the same way, which is to say, as a sort of 3 to 5 year bet, are equities in a position to really deliver returns that are worth the risk. And the irony is, of course, whenever you're at a high, you get things like, this time it's different. AI, the beginning, AI is bigger, 12 times bigger than the .com, and it's just the beginning. And who can know? It's nice, sounds nice, and sometimes it's convincing, but let's just stick with the charts. And the charts would suggest that, we're at a hell of a difficult level. And indeed, guess what? The market is finding difficulty.
So Carter, one quick question, because you've highlighted this before in the past. When you look at the Fab Five, okay, let's call it Microsoft, NVIDIA, Apple, Google, and Amazon, about $13 trillion in market cap, right? So when you look at the S&P, it's about 60 trillion, right, total. So it's about 21%. And then if you look at the All World Index, which you did, it's about 17%. So when I look at like a Microsoft, I look at a Google, I look at NVIDIA, and I look at Amazon here, they're not acting well, especially as the S&P got back towards those prior highs. So when you think about in market cap terms in a very small group of names that are not acting particularly well, isn't that something worth noting? Because again, you need all of the other participants in all these other sectors, at least for the S&P, to really make up a lot of ground. If Microsoft, if they can pull this up, Microsoft's very near its lows from August 5th. Google is very near those lows. NVIDIA won't take much to get back to those lows. So thoughts on that?
I mean, this is where the pressure is, right? And it's money flow. The opposite of this is this straight up move in utilities, in Costco and Walmart, in Philip Morris, in stocks that are quite extended. But what happens is that money flow occurs. Microsoft, in principle, could be considered cheaper here, if you will, but probably not cheap enough. And same with some of the other Magnificent Seven. Whereas the flow that's gone into the Philip Morris's or what have you, Walmart, those are getting increasingly expensive. So the net effect is perhaps not enough has been expunged from the high flyers that have rolled. That's Microsoft. And yet these that have absorbed some of the money are themselves now quite vulnerable. I think that's a 45% move in Philip Morris. And if you think about, let's talk about the why for a second. There are two whys here. Why? Because everyone learns day one, page one in school, whether it's whatever it might be, all the way up to Harvard Business School. If you are a steward of capital and you have to be long and you've just taken some profits out of a big winner, let's say you've trimmed your Amazon or Microsoft, but you're not allowed to hold cash, you have to go somewhere. Well, they were defensive. Everyone knows that. So this goes to staples and utilities. But if you look at that PM chart or Philip Morris, no one is believing when they do that's going to win the race. I'm going to beat the system over the next 2 years by getting long Philip Morris. This is a bond proxy. These yields were 7, 8, 9%. It's just the face of fear, or quite said differently, it's a very tactically smart thing to do, but it's already crowded. Money has gone there.
Well, to your point, I mean, that's just Philip Morris. Throw up, if you can, a Con Edison chart. And again, I think if you live in this area, you're familiar with Con Edison, one of the largest utilities out there. And this is trading anything but a utility stock recently. I mean, you look at the moves that these names have had. I mean, I don't want to say parabolic because that's a little hyperbolic, but these stocks have had pretty significant moves to the upside, which speaks to exactly what you're saying, Carter. I mean, these are, I think, safety trades in a fearful environment that suggests that the broader market, in my opinion, is on the verge of something. So I don't know if we can. So if you do a little longer term, you'll see. I mean, Con Edison should not trade the way it's been trading. Again, my opinion. So there you go. I mean, you see these sort of moves to the upside seemingly out of nowhere.
Yeah,
anyway.
that's a nice consolidation. Again, I'm with Carter on the notion of these, Philip Morris or whatever these bond proxies are. They're getting a little crowded here. Hey, Carter, before we get out of here, we're going to take a look at some tech earnings. But we wanted to get quickly to your Oracle. You had a note out to clients. They report next week. I think it's on Tuesday, the 9th. Just walk us through what you're seeing here, because this is a really interesting one. Guy, when we were talking about what we're doing today, he's like, old tech. I love old tech, right? And it's been a lot of comparisons to, Sun Micro and Oracle and Cisco and Nortel and, the bubble that was created, in the late 90s into 2000. But this one seems to be really bucking a trend here. So talk to us a little bit about what you're seeing here. And I'm assuming that this is into the print next week that you're kind of getting focused on.
Yeah, I mean, I think the thing here, and these are weekly bars, but let's go ahead and tell a story. We know that breakout was the June quarter. It was a gap, in fact, the move above the horizontal line at the sort of 125, 130 level. And then you get a beautiful check back to support, a nice bounce, and here we are now. And so I think that's the setup as depicted here. We move up and out of this formation, final chart. You can draw it that way. But the question is this: is it good relative performance? It is. Did it gap up last quarter? It did. Does it have to gap this quarter again? No, but I like it both as an absolute trade and as a relative trade.
Fair. And if you throw up, Carter didn't do this in his work, but a similar company in terms of the way people look at it, the way the market has looked at it, it's having a similar move. Throw up IBM, Amanda, over the last couple of years, and you'll see that this is a stock that very quietly all of a sudden has been performing extraordinarily well vis-a-vis its peers. So this, I think, falls into the same category.
Yeah, and again, I would just say this, that into the print, when people are starting to get focused on valuation, this is a name that is not so hard to get your arms around when you think about it. I think it trades at 22 times this year. This is a company that has 73% gross margins. EPS is expected to grow. This is, fiscal 2025. 13% or so, 14% next year. Revenue growth is probably a little less than that. Yeah, it's about 10, 11%. You say to yourself, well, on the out years, trading below a market multiple, You know, the only problem I have with Oracle, and I've had this problem for 20 years, is that this company is a massive roll up, right? So whenever, like, you know, growth stalls a little bit and they're seeing pressures on margins, they go out and buy something that's kind of faster growing, usually accretive, that sort of thing. I mean, that's the whole idea here. So I see what Carter sees on the charts. Fundamentally, I'm not that excited to go there because, you know, if you think about where these guys make their money, I know they're moving into the cloud business. They'd love to kind of get a bunch of this stuff, you know, take some share, AWS, Google Cloud, Azure, or something like that. But, you know, any disappointment on any of those metrics, I think the stock probably moves back towards its 150. But what I know, that's what makes a market. All right, Carter Braxton Worth, we really appreciate your fine work. We appreciate you being here with us. I think we'll see you next Tuesday.
You bet. All right.
Handsome man, Carter.
Great looking man.
A lot of questions about crude oil. So we have a chart actually with a little headline that addresses this. Last night, look, crude oil's traded horribly. Dan's been Johnny on the spot, but U.S. crude oil rises a couple percent, trades above $70 a barrel. OPEC plus, you know, yes, that's part of it. The other part was there was a big draw last night, about a 7 million barrel draw. Market was looking at about 1 million barrels. Okay, fine. It also got down to the levels that you had talked about, those December lows. It should theoretically be support. Here we are now. So the first question is Chevron, this is from Chris E., the most obvious swing trade here, about to hit 140. If it breaks below, look out. Throw a Chevron chart up, CVX. Yeah, it hasn't traded particularly well. Exxon has actually traded the best of the big three. But much like crude oil, Dan, this is back towards what theoretically should be a huge support level. And I think in terms of risk reward, Chris, this sets up really well. I think you know where your out is. You just addressed at 140, and you're looking for maybe a move back to the 150-day moving average.
So, Guy, you used to trade oil. Let's talk about the psychology of this. I think it was about, 2 years ago when the administration tapped the SPR, the Strategic Petroleum
I
Reserve.
was apoplectic.
Yes, I know. I was with you, and I was less apoplectic. But when you think about it, they were selling barrels at what?
No, listen, and I've said this in retrospect. I mean, the way if this was a commodity trade, they sold high, and they theoretically could start to be buying it back low. So good for them. I mean, they're not commodity traders, but yes, to your point, they did it, as it turned out, at an opportune time in terms of the price.
Right. And so if think about this, 90 to 70, it could be a pretty good level if you think about it. And I would also say in a very political season that we are in. And when you think about, Joe Biden trying to cement his legacy on some policy stuff, it might be a good way to kind of drop the mic. It would be a pretty great commodity trade for all intents and purposes.
I don't know what the regulations are. Elizabeth can speak to this. There are rules in place in terms of what you can do, over what period of time you can do it, blah, blah, blah. But with that said, it's optics that matter. So, if he were to get up and say, hey, by the way, for all you people, for every guy Adami out there that eviscerated me for tapping into the SPR for reasons that he didn't deem warranted that type of move, well, guess what? We're starting to buy it back here, folks. So again, whether they do it or not doesn't matter. It's almost like that drop the mic moment, Dan.
Yeah, no, and I just bring that up because it just seems like, we talk about Buffett. And I know you have a slightly different opinion. He's kind of cleaning some stuff up for his successor and stuff like that.
Think, yeah.
Well, it's one idea there. This would make sense too, especially given all of the uncertainty that we have in the Middle East. Because if there was ever a really big dust up, you might see oil start to go higher. So, and it's not like the administration, unless there are rules that we just don't know about, they're not going to basically, tip their hand, or you know what I mean? They're basically going to start buying it. And maybe that's why down here it works that way.
And that goes to Darren F's question as well, in terms of so bad it's good in terms of oil. We had some questions yesterday that I wasn't able to get to. So hopefully those people are still up. Jody Edmondson asked thoughts on UBS's ASML downgrade. That was yesterday. ASML is a name we talk about from time to time. This is sort of Dan's world. I'm going to look at the stock right now. It's an $800 stock. I think it's a $300 billion company. I think, listen, it's had a great run. It sort of topped out like a lot of these things in the beginning of July. I think there's room to the downside here. I don't think you run too far from it, but this is one I think you could potentially see 700 to 725 as ultimate support.
Yeah. So what's interesting to me about this is when you look at, if these guys make the equipment that go into the fabs, right? So if I'm looking at their customer concentration, I see Taiwan Semiconductor at about 28%, Samsung about 22%, Intel about 10%. So, Micron is, 3% or something like that. So what is it saying? Again, this is one analyst downgrading the stock. I got to get my hands on the note because I haven't seen too many of the data points. But if you saw this business starting to turn, let's say there's less demand for their equipment, well, that would mean that there's probably slower orders in the chips that Taiwan Semi and Samsung make. But again, this is all a big mosaic here. And one analyst, he could be dropping the mic. Maybe he upgraded the stock at those lows. You know what I mean? Sometimes you just don't know. And we don't trade off of what analysts are doing one way or the other, but we do use them as inputs. Wouldn't you say so, guy?
I do. Yesterday, we got a question from Eric Clifton. This might trigger you a bit. It's not my intention to do. My answer, I think, might trigger you more than the actual question. Why is Tesla up? This was yesterday, by the way, 5% for no reason. Is it too heavily shorted? Tesla's up again today, I believe, if I'm not mistaken, trading
about 5%,
up about 3.5% or so. So it's trading 228. Okay, I don't know why, but if I'm guessing, and again, I'm going to bring in politics for a second. There's recent polling that's come out that suggests maybe the Kamala Harris bump is sort of waning, and Trump seems to be gaining steam. I think a Trump victory is positive for Tesla. Now, people can say you're wrong. That's fine. That's how I'm interpreting this. And I'm not saying I'm right.
Well, the thing with Elon and Trump is really odd.
It is odd.
It's gone back and forth. This was in January where Elon said on their call, this was on the Q4 call, if there are not trade barriers put up on Chinese EVs, it's going to totally demolish, all these, kind of Western sort of makers. And then he flip-flopped on it. And then now that Trump is back on the trade war and they've kind of cozied up, he's back saying, well, maybe we do need to. I just can't make head or tail of it. There's talk that he might join some group within the administration, but again, the polls are going to go back and forth.
Yeah, 100%.
No, but what I'm saying is, it's such a tight race. It's going to be 1 or 2% in the margin of error, probably until November 5th.
Great, but I'm trying to.
No, I understand.
Figure it out. All right, this is a good one actually because we wanted to talk about this. From Alex Rifkin yesterday. Not sure if you're taking questions. We are, but would love to get your take on dollar yen returning to levels seen on August 5th. Thank you for that question and about the jobs market impact on Friday, which we addressed. So I don't know if Amanda can do this dollar yen chart. Yes, she can. So you saw the move down on August 5th was dramatic, and that sort of was, to me, the dollar yen unwind was the catalyst for the market move to the downside. Dollar yen bounced. The dollar bounced against the yen. We're right back down to those levels. As a matter of fact, I believe, Dan, last night we saw dollar yen breach 143 for the first time in quite some time. So I do think dollar yen is a story still. I don't think the unwind is finished. I still think there are potential hiccups in the system. And I do think this will lead to further volatility in the equity market.
So great segue, because we were talking about the VIX before, and that might be the reason why we have a 21 VIX. Okay, if you think about we got back towards those highs, the VIX never really came in that much when the S&P was standing on the doorstep of a new high. So it seems like there's some other factors. And listen, people, we might just be in for the next month and a half, 2 months in front of the election into a much more volatile period. Tom Lee of Fundstrat was on Squawk and Friends, I think 2 mornings
ago. Was it the Friends?
Yeah. And, he was saying the same thing. This is a guy who's been very bullish. He'd been very right for a while on the equity markets. And he said the same thing. He said, I think there's probably a downward bias to equities given the uncertainty and the probably increased volatility in and around that.
Katie Stockton was also on, I believe, Squawk and Friends. And she thought we're in a period of time in terms of volatility that can last into next year. And she's been very good on that as well.
Yeah.
Final question, unless there are more that I missed, but this is a good one. James Lundgren yesterday asked, says, Guy, huge fan here. Thank you, James. Question. I love this. Were you getting exorcised with how many times Goldilocks was mentioned on Fast Money?
Wait, hold on a second. Because I looked at you during that conversation. It was Andy Constant, right? Who comes on the show every so often. And he said it like 5 times.
Yeah.
Now, listen, we all have some of those crutches, you know what I mean?
100%.
We use them again. But the Goldilocks is a crutch. It seemed like a little much. I think he said it 5 times.
Yeah. It's one of those things. You want to say it once, but multiple times becomes problematic.
You were jumping out of your
seat. I am not. There's certain, as people have come to know, and I am not shy about bringing it up.
No,
there are certain things that really just
frost your ass,
frost my ass, and that's sort of one of them.
Yeah,
We're gonna, and it's the time of year.
We're
Are we
spending a
gonna
lot
get-
of time on your
Are we
ass.
going to get the
Yesterday,
same?
we
I
were
have no
talking about
ass.
no, you're no ass at all
Yeah.
syndrome. Hey, by the way, we're going to get to we want to hit Broadcom before they report
Yeah.
because it's really important. But I did
Comes out AVGO.
I did a little sleuthing. So the New York Yankees have played at Wrigley Field regular season 13 times, postseason 32 and 38 in the World Series. You had that right.
When was the last? Can you see the last World Series they played?
38.
Stop it.
You nailed it.
Stop it.
I said 32.
Stop it.
Yes.
19. What did I? Hockman, you hear that? 1938.
Yeah.
And that was Lou Gehrig was on that team.
Yeah.
No, I'm not even kidding around. Tony Lazzari was on that team. The fact that that's remarkable.
Yeah,
That's Rain Man
they played
shit.
games 1 and 2 at
No, that's extraordinary.
Yeah.
Let's take a look at Broadcom. Again, comes out AVGO. This is a $700 billion company. So it is a very important company. Been lower left, upper right for quite some time until, like many of these companies, the early July.
Mm-hmm.
Valuation, I don't think is a concern. You obviously saw a very dramatic sell-off. Basically, again, from the beginning of July until that August 5th date, I think it got down to 135 or so-ish, maybe even a tad lower. And now we've bounced. I'll say this. I sort of like it here.
Mm-hmm.
I think you could take a run towards those prior all-time highs, but I can understand why people would say this has got to be a wait and see.
Yeah, and listen, when you think about what we heard from NVIDIA, and a really great quarter, good guidance, it just wasn't above the whisper, right? So when you think of the magnitudes of the beats that we had on the raises and, the current quarters and the like, it just wasn't enough. And investors are like, listen, we've had this amazing run. You know what I mean? The days of these massive outperformance is probably behind us. And so this is a company that they also have a big customer concentration. I think, Apple is the largest at maybe 17 or so % of their revenues. And then if I look at, it's about 17%. Dell is close to 10. Alphabet's 8.5. Meta is 6%. So we've heard from most of those companies about their CapEx. You know what I mean? They weren't greater than expected. So again, this is the sort of thing where, and I could also take this a step further. If their guidance is kind of soft, right? So they make these chips, these communication chips for 5G that go into iPhones. Okay. If their guidance is soft and you could break that out, well, then maybe the Apple ramp for iPhone 16 is not as good as some
and that will
think.
be interesting because that will fly in the face of what we heard a week ago about Apple, who said that demand for these phones, and that's why you got that subsequent pop in Apple. So again, just there are a lot of dots to connect here.
By the way, so you said you're inclined to be there. Listen, you said valuation's fine. Valuation's fine as long as those forward numbers kind of stay in place. So it's trading about 25 times next year. And you look at the expected EPS growth, it's like mid to high 20s. So like that on a PE to growth seems pretty reasonable. But that's why this guidance is so important. And I'll just say this. If they were to guide in line to, let's say, slightly less than the street, I think there's another leg lower.
Katie barred the door.
Yeah.
As I mentioned at the top of the show, today is Thursday, September 5th.
Correct.
Which is important for a myriad of different reasons. But it also is beginning of the season in the league where they play for pay. That's the National Football League. Yeah. I believe the Ravens of Baltimore
are
playing the Chiefs of Kansas
college
City.
Football, they pay for play now.
They do. That's true.
Yeah, so that's
the unfortunate reality.
That was a Chris Berman thing, right?
No, that's a Mike Francesa thing in the league where they play
for pay.
Yeah. But yeah, it's a fair point by you. Why I bring that up is, this is week 1.
Yeah. And
what I'm telling you folks is, things start to move very quickly now. You're going to wake up one day and be, holy shit, it's week 13 in the NFL. Then when it's week 13, I'll say, remember on September 5th.
So what are you going to say? What is your what are your big predictions here?
Listen. Chiefs have a great roster. I'm not a believer this year. I think
the Chiefs.
But
they won 2 in a row.
They have. I believe they have. The Chiefs, look, they'll win 12 games in the regular season. Somebody's going to bounce them. Somebody's going to knock them off. It's just, that's my view. We'll see. And I think it could come in the form of the Ravens, who are effing loaded.
Mm-hmm.
And I do think the Chargers, who have underperformed now for years with this new head coach, Coach Harbaugh, could start to figure it out as well.
Okay.
It's just my 2 cents.
I guess I'm more excited for college football this year. It's
Why?
just, like the realignments. There's some kind of funky sort of like Texas is going up to Michigan.
Yeah,
like
and
this
Texas
weekend.
is going to beat them.
Well, I know. I'm just saying.
No, I'm just saying.
But,
And
like, I find those matchups kind of interesting.
that's
I
fine.
want to be like, dun, 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 dun. Isn't that like the CBS college?
I don't really know.
What time is it? It's 1:40
No, I
on
know.
the East
Are
Coast.
you going to go with your gang to one of these games?
Probably my crew.
Your crew.
Yeah.
I'm winking at Hockman because he knows.
Do you have any more questions before we get out of here?
I have no questions. Oh, are there any more
Yeah,
questions?
anything kind of interesting?
No, not particularly.
Well, one thing I'll just say this is so yesterday we kind of mentioned not kind of this.
Oh, wait a second. I got sorry.
You just got to cut me off.
Well, no,
Just
you
come
got
back to it.
No,
We
I'll come
mentioned
back to it.
Well, we mentioned this information, this tech rag, what I think is excellent, that they had this commentary about Microsoft, the adoption of Office 365 and Copilot and the like. And, they basically said, and I actually it came out while we were doing the show, but as I read it further, they were saying that less than 1% of their customers have adopted this sort of stuff.
It's ridiculous.
So the opportunity as they continue to improve these things. Right now, it's not getting great marks, but they just wanted to kind of get it out there. A lot of big, businesses are pushing back at the licensing fee, which is double the prior fee, that sort of thing. So to me, all very interesting. But the one thing that I was just keeping an eye on as we came in today, Microsoft opened up green, not aggressively, went down. Nvidia was, up a few percent, and I think it's down.
Yeah.
So just keep an eye on those things. They're driving the train.
Dino asks, Guy, thoughts on Cava? That comes out CAVA. That's that Mediterranean.
Dude, we've been eating that. I had it for the first time last month, and I'm off sweet green, and I'm doing the Cava. Bill knows. We do it together.
That's yeah. Throw a chart up. This is what I think. In the same way people railed against Chipotle in the early days on valuation, is the same way they're railing against this company on value. You cannot make a compelling case for this company on valuation. What you can make a compelling case is their growth trajectory. So this is one where any sell-off, in my opinion, Dino, you want to buy this because I think you're looking at an early stage CMG in the form of CAVA.
Yeah, the only thing I'll just say is this space is really crowded. So this is the space where people want fast food, but they want healthier,
Sure,
or at least the perception that they're eating, in a healthier manner. So I'm with you. I get it, Guy. I'm just saying it's like $13 billion market cap. That's fine. You know what I mean? On the price to sales, very expensive. It's also a very new kind of story in the public markets. And I think your point is that sometimes these things have to find some sort of equilibrium. Hey, listen, McDonald's traded a premium for years and years. And now there's no premium really anymore.
Unfortunately, you couldn't buy McDowell's back then because I think there have been some nice arbitrage.
Coming to America.
This is, Bill, this might be good for one of your routines if you're listening, okay? People, and I'm sorry, Amanda, but this is our last market call of the week.
Yeah.
So people are tuning out now. They have things to do. But it's funny to hear people talk, and grammar to me is very important. They'll say, I had a healthy apple for lunch. And what they mean by that is they had an apple that they've deemed to be healthy for them.
Yeah.
But that's the wrong, because when you say I had a healthy apple, grammatically that means the apple itself was healthy. You have no idea the health.
Well, if it had
thereof.
caramel on the outside of it, would not be healthy.
So what you should say is, and this is for all the folks listening, I had a healthful apple.
Oh, nice.
At lunch.
When's the last time you
I had a healthful
for an apple? Think about how disgusting that is.
Lunch.
When kids are putting their face
Phil, you hear that?
And bobbing for apples, they would never do that anymore. Think about it. You put a bunch of apples.
Because there are razor blades in the apples.
No.
That's the old wives' tale.
Don't
take the apple at Halloween because they put razor blades, and don't walk by the cemetery because everybody hears this.
Yeah, but bobbing for apples, putting your head into that thing of water that 15 other kids. Yeah,
I do that. Well, you've seen me. I mean, I do a number of gross things. Like there's a piece of candy on the floor. I pick that shit up and eat it. Don't bother me none.
I know. All right. Well, on that note, should we get out of here?
I've enjoyed this. Danny Moses. Okay, a lot to talk. Market Matrix next week is week 17 or 18.
Yeah.
You can throw up the graphic while we talk.
Listen, go.
And by the way, smash the shit out of the like button.
Yeah, that'll help people find it. basically.
Everything.
So follow it.
Why wouldn't you do
rate
that?
it, review it, share it. We're really psyched about this thing. We kind of curate 10 of the most important business and market stories of the day. We get a nice little summary from a large language model. We take that text, we put it in 11 labs as a voice bot. We call him Brunson. So the best part of this thing is it's all in under 10 minutes. It's kind of what this brain trust thinks is kind of important for you, especially if you're one of those people who's not staring at your FactSet machine all day long. Maybe you have a real job, unlike Guy and me. And at the end of the day, when you're leaving your job or you're walking your dog, you put this on for 7 minutes and you get up to speed on what's going on.
Walking your dog.
Our team has done a great job with this. We're really excited about it. So, go follow it, rate it, review it.
We're going to do in a few minutes, we're going to tape our podcast.
On the tape.
The On the Tape podcast, which will drop in your favorite podcast store tomorrow.
Tomorrow morning, early.
Because Jacob is Johnny on the spot with that. He cleans the shit up and he gets it out.
He's the man.
I have nothing. Do you have anything else?
No. It's great.
I heard Mary Had a Little Lamb on the way here by the great Stevie Ray Vaughan.
Oh, really?
Yeah.
You mentioned him on the pod last week.
Love Stevie
So
Ray.
when I was not on the Tape podcast last week, I listened to that On the Tape podcast.
Did you?
Yeah. And you guys talked about, how he passed 1990, Robert Cray. People thought that Eric Clapton was on it. That was the Journeyman tour. I saw him on that Journeyman tour. That was awesome.
I've seen Clapton a number of times. Big fan. I think what people don't understand, the genius of Eric Clapton. I mean, there were people graffitiing in London. Clapton is God back in the 60s.
That said, one of his most popular songs, and you're not going to like this, Tears in Heaven, is probably one of the worst songs.
It might be a popular song. His son was killed.
Yes, very sad.
Yes, very sad.
But it got way overplayed.
I think there was a sentimental value of that.
I hate it.
But you go to Layla and Other Assorted Love Songs by Derek and the Dominoes.
Yeah. EC Was Here was one of my favorite albums.
Can we play music on it? We can't.
Jacob will be able, next week he'll be able to do that.
I Looked Away. If you listen to the lyrics of I Looked Away, and basically what he's saying is Clapton is he's in this relationship and he looked away, which is a metaphor. It's actually not only a metaphor, but it's probably true.
Yeah.
So he looked away, and while he was looking away,
she was out the door.
5,000.
Yeah, Audi 5,000.
As we need to do.
Do we know who he's talking about?
Probably Patty, what's her name? The one that was married to George Harrison.
He wasn't in that throuple with
He married George Harrison's wife.
What about Angie, though?
So George Harrison's wife, Jacob, if you could get in my ear or just put it whatever. I can't think of their name off the top of my head, but she was the impetus, she was the inspiration for 5 of the most iconic songs of all time, including Layla, including Bell Bottom Blues, including A Wonderful Tonight.
I like that.
I mean, it's incredible.
That's a little sappy too. Wonderful,
beautiful
Tonight.
song.
Yeah.
Hold on, Jacob is coming in here. Patty Boyd, that's right.
All right, but let's get to another famous rock thruple, and we're not going to go Fleetwood Mac, but I'm going to go Angie. Okay, so this
Rolling Stones,
Mick Jagger, and David Bowie.
I think yes, that's true.
I think Angie was the kind
of. I'm not sure who the foil was,
or it might have been the two of them having a thing.
Who knows?
I think that was one theory there. All right, well, on that note, we should probably move on.
I love Amanda. What do you think she's doing right now?
She's getting pissed. She's got stuff to do.
All right. I've enjoyed this.
It's fun.
Market Matrix. Smash the shit out of the like button.
Yes, please do.
On the Tape drops tomorrow.
Yep. Can't wait. And I actually won't be back on Tuesday. You're going to be, I think,
where are you going?
I'm going to LA.
Los
LA.
Angeles. That's Los Angeles.
Myself. And then I'm going
Staying
up to
anywhere
San Francisco. And Santa Monica.
If you're going to San Francisco, please be sure to wear flowers in your hair.
Yeah. The coldest winter I ever spent was summer in San Francisco.
Mark Twain.
So this is really cool. On Tuesday, so CNBC, on our show tonight on Fast Money, we're doing this whole bit about sports in the
valuations,
intersection with money and sports. And so CNBC is launching this initiative that's going to be focused on this stuff. And so they're hosting this event on Tuesday in LA. It's called Game Plan. KD is going to be speaking there. Tons of big business. Durant, you know him.
KD.
Yeah, that's what they just call him. You know,
who's they?
Everyone other than you.
My grandmother used to say, "Little guy, they're all wearing this."
Yeah, them.
And I'm like, I'm 8, 9 years old. I'm like, Grandma, who the fuck are they?
Whoa.
I did because
really?
I don't like they are all saying the same.
Yeah.
I don't care what they are doing unless I know who they are. Don't use pronouns. So when you say KD, I don't know who KD is.
Over my
by the way, he has not earned the right to be called like KD.
What are you talking about?
That's what I'm talking
He's
about.
one of the best players in the league. He's
Shaq,
7 foot. He's 7
you talk
foot
about,
2.
you want to say Shaq?
He's so
I
much
get it.
more versatile than Shaq. He literally pulls up from the 3-point line and just drains it.
I'm building a team.
Yeah.
I'll take Shaq in his prime. Shaq was a man amongst boys. Shaq was Bill Hockman knows.
No,
The guy's a freak.
No, he isn't.
Okay.
Nice guy.
I love Shaq.
Have you ever
I've
shaken
met
his
him.
hand?
He's a
His
monster.
hand engulfs
I
your
have a
hand.
picture next to him.
Yeah.
I look tiny. I look like Jim Goldman next to him. Google that.
That's
shit.
a deep cut. All right. We
See
got to
you
get
later.
out of here.
Goodbye.
We appreciate everybody.
Bye.
Have a great
Bye.
weekend. Thanks. See you Tuesday.